All right, welcome to Coffee with Marcus and Mark. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Monday, September 12th, and there's a lot going on because last week stocks finished higher and snapped a 3-week losing streak. The S&P closed above 4,000. Today, we have a super interesting phenomena going on with the VIX and the markets. We need to take a look at this, and then this week also key inflation report that's coming out tomorrow. We'll take a look at this and what this means for trading. Plus, we'll show you our current positions and how we are trading the markets. And I'll show you the trade that we did this morning. So as you can see, there's a lot to talk about. So let's get started. But before we do this, let me introduce myself. I'm Markus Heitkoetter. This is my head coach, Mark Hodgson. We are real traders who trade live accounts, and therefore we have a lot of trading experience, and we are showing you how we trade these crazy markets. So as you can imagine, we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. All right, looking at the markets here. What do you think about this, Mark?
Yeah, that's an understatement, Marcus. I mean, back to back to back wins last week. Friday, markets finishing near session highs with some nice gains, and it looks like traders are still jumping in and buying stocks because we opened up higher this morning and continued to rally throughout the morning at least.
Right. So, I mean, we talked about it last week. So we are above 3,900. We found some support there. We are closing above 4,000. But what I thought is also very significant, we are above the 50-day moving average again. And I think that's kind of a big deal.
It is, and this is where the 50-day, 200-day moving averages they've been used as technical levels. Historically, where the 200 is longer term, 50 shorter term. I know that's 50 days is still a lot, but some traders will look for crossovers between the two, or just price being above, say, the 50-day moving average to help identify a trend.
Right. And so there's a lot going on. We have a 50-day moving average, and then, as you said, the 200-day moving average. And the last time the S&P bounced off and used it as resistance and then moved lower. So that's where also just looking at some technicals, looking at Fibonacci numbers here at Fib levels, we see that right now, as I'm zooming in here a little bit, we're bouncing towards the 0.5 level. So that's kind of significant, right? This is where we'll see. Okay, next few days or this week, I feel it's kind of make or break for the markets.
I agree, and we talked about this with the initial move higher, right, and then the pullback, and it did get through that 50% level. Actually, got closer to that 68% level, and now on this next leg up, we'll have to see if we're able to continue to rally. But this is where sometimes these technical levels and Fibonacci levels can act as self-fulfilling prophecies if enough traders are looking at these numbers and at these levels. But to be honest, this week, Marcus, a lot of it has to do with just plain and simple data.
Yeah, because this week is the big one. We have been talking about it last week. So tomorrow is the CPI data. Even though the Fed really likes the core PCE data as their main inflation gauge, this is here important because it will be the last data that the Fed gets before they meet next week and decide how much they're going to raise interest rates.
Exactly. CPI data, core CPI data coming out tomorrow, pre-market, 8:30 a.m. Eastern time. PPI data, the producer price index, coming out on Wednesday, but I think CPI is really the biggie this week.
Right. So here what we see is the monthly change, but the important one is actually the annual change. So right now everybody's predicting it will be around 8%. And we talked to our mastermind members about it this morning. If we come in much higher than 8% at 8.2 or 8.3, I think the markets will be tanking because this means that the Fed has to raise interest rates even more aggressively than they are already doing it. Anything that is significantly below 8 might actually indicate that the Fed is getting the inflation under control and that traders are anticipating maybe they are easing up a little bit on the interest rates and could give a market rally. And I think coming in line Well, I don't know. Trade what you see, not what you think, right? But these are my opinions. What do you think about tomorrow?
Oh yeah, absolutely. I mean, at this point, a 75 basis point hike is priced into the market. So that's what traders are expecting. And generally speaking, if you have confirmation of what's expected, in general, that tends to be a little bit bullish just because it alleviates some uncertainty in the market. But if there's a big change in either direction, then the Fed could change, or these probabilities, they're just that, probabilities. But if the Fed does need to be aggressive, the economy is ready for that based on what we've seen data wise. And if they could be a little more conservative because inflation has just dropped considerably, traders would definitely love that.
Yeah. So, I mean, we talked about it, certainty, right? And uncertainty. Today, we have a super interesting phenomena because today the markets are up. So the S&P is up, what, 0.9% here. So that's quite a lot. It's quite an update. But also the fear index is up. What do you think about this? Usually there's an inverse correlation, right? I mean, when fear is high in the markets, this is when they're going down, or the other way around, when markets are going down, that's when the VIX is high. But when we have a day like this, where the markets are going up and the VIX is going up, that's telling us something.
It is, and the VIX, the volatility index, aka the fear index, is tracking S&P 500 premium, option premium, essentially over 30 days. So when the VIX is rising, that's saying that traders betting on options are paying more for options or pricing in more volatility because they expect more movement. Like you said, typically that happens on down days, not up days. But this just goes to show the importance of the uh, the reports this week.
Yeah, it all goes down to this. This just shows tomorrow can be a massive move for the markets to the upside or the downsides. And it seems that traders are preparing for it. It's almost like preparing for a hurricane. Yeah, you never
Yeah,
know. I mean, it could be a non event, but you want to be ready here. And that's
no, that's
exactly how we approach the markets today.
yeah. I mean, great analogy, right? Hurricanes on, off the coast, and you see insurance premiums going up. And it could be that it's a non-event and things come right back down. But great analogy.
Yeah. So let's talk about our position. So we were both in the gold position last week, and then gold closed above 15. We sold the 15 called. So here we got called away. So this was a nice profitable trade, a completed wheel trade. So we sold puts at the 15 level, collected premium. We did get assigned, so we owned the shares. Therefore, we sold calls and then got called away. I mean, this is just a picture perfect wheel trade that we had going on there.
Oh yeah, nice premium. Great annualized premium. What we were able to bring in a real short time based on that stock price. So worked out great. I wouldn't have minded holding gold for another week or two.
Yeah.
Marcus, totally off topic, and I apologize, but I did not see what's driving this. But silver's up 5%, which is interesting because
Whoa.
gold's up
Okay.
about a half of a percent right now, and
Yeah.
silver's just going crazy. So I'll have to look into that a little bit more, but that caught my attention.
Yeah. Anyhow, so this no longer in our portfolio. Still Google, and this is one where we both sold the puts at 108. I got assigned. You did not get assigned because we just closed barely in the money, and because of the assignment, I mean options buyer doesn't have to take assignment. You did not get assigned, so you sold more puts last week, bought them back. I got assigned at 108, and then last week I first sold the 109 call, so in order to also make some money here on the stock, and then I was able to roll it into the 110 expiring this week, and super interesting. So Google pulling back here a little bit right now.
Yeah, I think that you're in a great position. In fact, there's some decent premium around support here in Google. I decided to hold off today because of the data being released tomorrow, but Google, I think, is a decent play, and there's even some premium inputs this morning.
Yeah. All right, then we have Nvidia. So not a whole lot going on there. So slightly down here. I mean, just shy of 1%, and that's also based on news that there's probably more export restrictions. on chip companies exporting to China, that there's more certification. So there's some uncertainty here, but this is where, again, NVIDIA will react with whatever is happening tomorrow. And then TPR. TPR, the fun one. I mean, TPR, I've had it for a while, have been able to sell calls against my existing positions. I have 2,700 shares that I got assigned at 37. And this morning, I was selling calls again.
Yeah, nice run in TPR, outpacing the market almost up 3% this morning compared to the just shy of 1% move in the indices. So TPR going higher and a nice premium for you.
Yeah, because here again, I had the choice of either selling at my sign price at 37 or going one strike higher, which here was in 50-cent increments at the 37.50. And I did that. I was able to get 30 cents for this. So this is $810 in premium, with the possibility, if TPR closes above 37.50 on Friday, of making more money, $1,350 on the stock, for a $2,160 gain. So this is definitely one to watch. This puppy has been a wild one.
Yeah. And Marcus, I mean, this is where the calculator just really comes in handy because in this market environment, I've been tending to sell the assignment strike. And for you, that would be 37. And with our mastermind group, I was looking at the 37 and the 37.50. And really, you saw there that with the 37.50, you could potentially double your profit potential on the trade, just collecting a little less, which would be guaranteed premium wise. But that 50 cents on the upside really made it a more profitable trade if the stock continues to rally. So I think the 37.50 was an awesome play.
Yeah, and last week was already a great week because last week I collected more than $4,000 in premium. So it was, I think, $4,400. Right now, this $810 is pretty much guaranteed no matter what the stock does. If the stock closes above 37.50, I get called away, make more money there. If it closes below 37.50 on Friday, I have another opportunity to sell even more calls and get more premium here. So we'll see what's happening there.
Nice trade.
Yeah. Well, and then we said it, even though there's a few things popping up on the scanner today, we are not too inclined to take any trades today because tomorrow could really be the big one. I mean, this is why we see that the VIX is up. So yeah, I want to wait what's happening tomorrow. Today we're preparing for the hurricane. Tomorrow we go out surfing.
Surfing and shopping, hopefully. We'll see.
Yeah, we'll see. So looking a little bit at a 5-minute chart of the S&P here, we see that this morning we opened strong, right now rolling over. And honestly, for the remainder of the day, I wouldn't be surprised if we just finished right around the flat line or maybe even going slightly negative. That traders are just being careful of what's happening tomorrow. And this is where I'm super excited about tomorrow. We've been waiting for it for the whole last week.
Yeah, busy couple of weeks, and I'm with you. I was a little surprised that we had this rally with such a heavy data week, and I think that we're going to come back down to planet Earth a little bit before the data. But busy week for this week, and then the Fed next week.
And then the Fed next week. Yeah, and I mean, I also did my bookkeeping over the weekend with everything that happened on Friday, and right now I'm up to $116,000 in profits for the year. So coming along nicely, and this is not including the $810 that I collected this morning. And what I really like about the platform that I'm using here, Tradier, I mean, if you look at this, just for options, it was only $143. And
Nice.
the total commissions was just shy of $500. With other brokers last year, I paid, I think, more than $4,000 or $3,500, something like this. It's kind of crazy. So I really like that. All right, cool. Well, again, we talked a little bit more about rolling and how to select the right strike price. Not rolling, but how to select the right strike price when we actually sell options. And I did a video on this. Take a look at this. And this video shows you how to sell covered calls like a pro. Take a look at this video, then you understand why I chose the 37.50 this morning over the 37, and we'll see you tomorrow with a super exciting update.
Happy trading, everybody.